How's it going, everyone? It is Andre Williams, and today we're going to be talking about ticker symbol FRX, Forest Road Acquisition Company. You got that right. This is a SPAC that's planning to have a merger with the Beachbody company. I have a lot of years in experience in the health and fitness industry, and I see this as a big opportunity that, hey, and I want to bring some more attention to it because I feel like for investors, hey, there's some room for a lot of profits, especially if you can get in early. So like I do in all my videos, we're going to be doing a technical analysis in regards to making sure that you're getting the right price. And two, we're also going to be going through the investor presentation. So looking at the market opportunity and seeing, hey, where there's growth, how they make money, some of their products, and things you just need to know before you actually decide to invest in a company. If you're new here, there's something that we go by called the KLTs. We ought to be able to know, like, and trust any company we decide to put any money into. All right. I also want to put in the disclaimer, I'm not a financial advisor and this isn't financial advice. So when you do invest, just know you're doing it at your own risk. Let's get into the videos. On FRX, Forest Road Acquisition Corp. All right. So we're looking at the price. How much is this SPAC gonna cost us, right? We see the potential it has with merging with Beachbody and so forth. So we need to actually get into the technical analysis aspect. I think that's important so we know, hey, what's a good price to actually buy this at? So by looking at this chart, as you can see, it kind of has some support in this particular area, right? Look at that. It's met it on different occasions. It's around $13.98. So honestly, $14, I'm good. Anywhere in that $14 range is definitely a great place to start building out a position. If you can get it lower than that, even better, right? But as you can see, this stock was trading on the 18th at $11.40 and it reached a high of $17. Can it revisit this high of $17? Most definitely, because it closed the day at $15.75. So that's why any pullback back to the $14 range is a good buy. As we can see here, there's resistance here at 17.23. If it passes 17.23, we're going to be going to 18 very quickly. I'm telling you that right now because we've seen it. Anytime these stocks go past a certain resistance level, there's going to be some momentum or some previous highs, right? We also see here, most recently, and this was during regular trading hours, the resistance level was around 15.73. But as you can see in after hours, it made a move right above it, right? Closing at 15.75. So these are things to take into consideration. And when we look at the support lines where we've seen some consolidation, like I said, it seems like that 14 area is an area, 1450. You can't go wrong. And if you can catch this area in the 13s, high 13s, even better. That's really good. Because if we look at the RSI over here, that's around 1068. And we know if it's below 30, hey, that's good value. That's cheap. But also, if we look at this over here at 1449, RSI is still relatively cheap at 33, right? We're at 33, so that's a good place to add. And we've seen it bounce off this area. Look at that. What do we call that? That's a support area right there on the Friday when it was happening. So the 13 to 14 areas are definitely good places to add. Now, as far as what's going to happen tomorrow, hey, I would love for there to be a gap down so I can get in at a cheaper price. I'm going to be completely honest with you guys. But if it gaps up, I'll watch it a little bit. But I'm definitely not looking to pay or start building on my position above $16, just to let you guys know that. But again, we'll see how the stock is and so forth. Like over here, we do not chase stocks. All right. Just want to throw that out there. Since you guys know this is a SPAC, you also know what's coming up next. I'm definitely going to be playing those warrants. So the warrants, again, is another way so you can make some quick profits. Aside from quick profits, also make better returns in regards to percentages than compared to if you're going to be trading the stock. So as you can see here, before it was announced, price of the warrants are $3.17. And as you can see, we reached a high of $6.48. So literally anyone in that particular situation had the opportunity to double their money. So if I'm looking to buy the stock in these particular areas, right? Because like you said, like as you can see here, the charts are very similar, right? So if we're looking to get in that 14 range, like I was saying, because we're matching it up with this over here, right? Let's move it over for you guys. that 1450 range, that means for the warrant, we're looking to be paying $5. $5 if you're going to be buying the warrants. $5. That's good, right? I don't want to pay no more than, let's say, about $5.50 in regards to an average cost. And like I said, if this stock ends up going to $20, $17, you know what? Let's kind of go back and I'll show you guys where the value of the value of the warrant got up to $6. And then at open, right here, the value of the warrant was $4.16. All right. So again, is it going to revisit the $3.93 or the $4 range? I kind of doubt it, but hey, if there's a pullback, you better believe I'm going to be grabbing me some. But I think right here is fair at $5. All right, because these warrants, again, I will not be surprised, especially as it gets closer to the actual merger and everything happens, that these will be $10 plus, easy. All right. It just hasn't gotten much hype. The news just came out. Not many people are aware of this, and it's part of the reasons why I want to show you guys this opportunity, all right? Just know I'm not a financial advisor, and this isn't financial advice, so when you do invest, just know you're doing it at your own risk as well, all right? So let's get into the presentation. One thing that I want to tell you guys, when it comes to investor presentations, they are made to look good. Let's be real here. So if you see like on YouTube, you'll see a lot of people go through the investor presentations, and you know what? It's attractive. But one of the things that I'm going to do in regards to how I'm going to show this to you guys, I'm going to focus on what we need to know and what we need to actually really care about here, right? We're not going to go through the whole thing just reading and so forth like that, because we know that there's going to be a biased outlook of some sort. But we can take things that are very, very important and are valuable and use it to guide our investment decisions. So let's get started. So the Beachbody company, I know many have heard of this. I've worked in the fitness industry for a very, very long time. And I can tell you that, hey, many people who are getting into fitness, even a lot of the clients that I work with, many of them told me like, yeah, I've heard about Beachbody, or, you know, like, yeah, I see it on Instagram or see it on social media. So one thing about Beachbody, hey, it has a big name out there, right? Some of the products that you might be familiar with, I'll just go over them quickly. And the ones that I feel are the most talked about and out there is Shakeology, which is part of the supplements, right? The shakes, the Beachbody shakes. Insanity. A lot of people have done the Insanity program, and also P90X. I'm not excluding or saying the other ones are not doing great or they're not like great content pieces, but those are the ones that I've seen, heard, and again, just come across the most, all right? So now let's look at the management team at the Beachbody company and also at the acquisition company over at Forest, right? So for the Beachbody company, we have Carl Dakeler, who is a co-founder, chairman, and CEO. Worked with Guthy-Renker, National Media, Telemerica Media, and NFL Films. We also have John Cogden, co-founder, CEO of OpenFit. Worked in Guthy-Renker and also P&G. We also have Sue Collins, who's the president and the CFO. Past experiences, Dun & Bradstreet, California Pizza Kitchen, Sony, Pepsi, JSK, and PwC. One thing that I like seeing, they have great experiences, right? This is one of the things we want to look for because we know that they're going to run the company the way it's supposed to be run. So now let's look at these are just two out of the many members of the management team at Forest. But these two, again, stand out because they have great experiences. So Kevin Mayer, who's a strategic advisor. Also, we have Tom Stacks, who's the director. This is all the experiences they have between the both of them. So there's TikTok, ByteDance, Spotify, the Walt Disney Company, Disney, BAMTech, Lucasfilm, Marvel, Hulu, Pixar. Again, the management team looks really good. Also, another notable name over at FRX is Shaquille O'Neal. And I'm not going to talk about who Shaquille O'Neal is, but I found that pretty interesting as well, seeing that he's a part of this. Like I said, the management team looks great and gives me a lot of confidence knowing, hey, that in regards to the merger and so forth, things are looking good thus far. So the Beachbody company, what trends are they actually capitalizing on? Why do we need to know this and why it's important? Because as investors, we need to know how they're going to make money and are they in the right environment to do so, right? So the Beachbody company, so they want to take advantage of digital subscriptions, high value and monetization of content, delivering higher engagement and subscriber growth, reoccurring revenue with the ability to scale globally, connected fitness, benefits from the structural shift of consumers spending more time at home, integrated hardware and content, passionate and loyal community. I'm going to kind of just go into it quickly, even more further to break it down so you guys can understand this. So in regards to what they mean by connected fitness, you already know Peloton blew up during COVID, right? So that's integrated hardware and content, right? Peloton, you buy the bike, treadmill, so forth, and then it comes with content that you can follow along with, right? Also is the structural shift in consumer spending more time at home because of COVID, right? More people are investing in equipment, right? Also a passionate and loyal community. People who are into fitness, wanting to get into fitness, there's a strong support system there, all right? So now, growth, consumer health, and wellness. Yes, there's a lot of growth in the consumer health and wellness. So clearly in focus on the heels of pandemic, consumer and investor dollars continue to flow here, which is true. A lot more investors are putting in money into companies that specialize in the fitness area, and also a long tail for sustainable growth. Another word to say this to you guys is this. Fitness is not going anywhere. People are going to always want to get in shape. People are going to want to look good and people are going to want to feel good. So again, the environment that they're in, it's not the type of environment that's going to die down 2-3 years from now. So here's what the mission is. To help people achieve their goals and enjoy a healthy and fulfilling life. It's like I said before, and it's part of the reasons why when it comes to the fitness industry, this company could do very well. Hey, they've been doing well, but they can continue to do well. All right. So now here's some of the stats that we need to look at. So Beachbody has been consistently expanding its market share in the 1.5 trillion health and wellness industry. 72% of Americans are overweight or obese. $10 billion of annual consumer spending is expected to leave the gym sector as customers shift to at-home options. So what this means is that a lot of people are not going to be going to the gym like they used to anymore. A lot of people have invested into home gyms. So this is an opportunity, all right? Digital at-home fitness spend has surged 30 to 40% post-COVID. 87% of people who feel comfortable returning to the gym will keep at-home workouts as a part of their fitness routine. The online fitness market is expected to grow from $6 billion in 2019 to $59 billion by 2027. Here are the different segments that the Beachbody company is in. So as you can see, they're in the supplement section, right? They also have apps, whether it's supposed to be on your tablet, your cell phone, even again, you could stream it, stuff like that. That's what Beachbody and how when I first found out about it, that's what they were in. The second aspect is mixed fitness, which is the Peloton alternative, right? It's literally the same thing, but this is an alternative, but it's more cost effective. It's more affordable and so forth. And then we have OpenFit, which is, again, these are workout programs. They also have supplements. We're going to be taking a look at some of their digital subscriptions and how it's grown. All right, I think that's important. So they got 2.6 million in paid digital subscriptions. So from 2015, as we can see over here, right, they were under 500,000, right? Now in 2020, 2.6 million in paid digital subscriptions. That's looking really good. 89% gross margin on digital subscription. 89% is impressive. That is good. That's what we want to hear because this shows us, hey, this company can be very, very profitable. All right. And now we look at engagement. This is huge. So it looks like it was around 12.5% here. And now in 2020, 32%. That's, again, great improvement. All right. So now here's what we have. These are just estimates for 2021 revenue. 450 million annual subscriptions, again, at $99 on average, all right? Here are the key metrics, though. 96% of digital subscription retention. If someone signs up, you want them to stay for as long as possible. You don't want them out of there in a month or 2 months. You want to keep them on, right? Also, 180% 180 million streamed views. These are the amount of content that has been streamed by their customers, which is that's crazy. All right. Also, 12 workouts per subscriber per month. One of the issues when it comes to fitness, a lot of people tend to get bored. They want to have variety. They want to have flexibility to keep it entertaining and to actually keep them going through with the program. And this is good. And it's important because it helps with overall stickiness. Also, they're talking about this is their community, right? So in regards, they have a huge presence on social media. So as you can see here, 2.6 million digital subscribers, 400K Beachbody coaches, fitness and nutrition social commerce platform, right? So this is group programs, also a community where people can interact and so forth. And they got a large network of influencers, 125 million reach of social influencers. Now, OpenFit. The guys behind this who first started this was LeBron James, which I know many of you are aware of, and Arnold Schwarzenegger. Big time influence. So what OpenFit is, live and on-demand content starring fitness celebrities and influencers to drive engagement. Celebrity and fitness influencer models to drive higher volume of new subscriptions. Let's be honest here. Celebrities and influencers, what do they do best? They influence. I know you're like, Dre, that sounds so basic. Of course they influence. Yes. But the thing is, there's many people who look up to these celebrities, adore, love them. And what do? They buy. So mixed fitness, what that's all about, like I said, is a Peloton alternative, right? So that's why they say lower cost than their competitors at pretty much $1,300, $30 a month for the subscription, right? And then just talks about how it is and so forth. We're not going to go into that. We already know. We've seen that. We're aware of that. Here's how well it's doing. Like I said, 89% subscription margins, right? Estimate. Here are some of the reviews from reputable places. Must-have fitness gear for 2020. The best Peloton alternative, period, by CNET. The best exercise bike from the Rolling Stone magazine, right? 27,000 bikes sold. So these are their nutrition products. These are supplements. And again, the supplement industry in itself in fitness is growing like crazy, right? People are always going to be buying up supplements. So again, this is another revenue model that looks really good. They're saying, hey, so for 2021, right, here's the estimate, 450 million, right? And then after for nutrition, subscription, whatever, 560 million, all right? So they're saying this is the kind of money that we're looking to make, right, off our supplements. This is the type of the money we're going to be making off our digital subscription and content as well. Another shot of the management team that are behind the Beachbody company, right? Again, looks good. A lot of great experiences. We're seeing Amazon, SurveyMonkey, Ticketmaster, Toshiba, Pfizer, Activision, Herbalife Nutrition. Many have heard about that as well. Hewlett-Packard, Siemens, like DirecTV. Again, it looks really good. Love the management there. So this is where we are going. Again, you guys can pause this and take a look at this very quickly. Like I said, these investor presentations are made to look good. So I'm not going to repeat that again. We already talked about, hey, the market trends, the segments they're in, how they could take advantage and so forth. So here's looking at the historical and projected financials. All right. So we can see here from 2018, right? And now let's speed up over here what they're saying to 2025. That's serious growth right there. That's a crazy amount of growth, right? Even if we take a look here at 2019, again, when it comes to the fitness industry, this is a forever growing industry. This is the big opportunity here. We can see from the financials, we can see by the percentages, the growth rates that they're expecting. And again, like, I have no doubts in my mind about this because, hey, fitness is something that is not going anywhere. All right. So then they talk about pretty much the merger, right? So Beachbody is going to be merging with Forest Road at a pro forma enterprise value of $2.9 billion. Founders and selling shareholders to maintain over 80% pro forma ownership. 50% of FRX founder shares, 3.8 million to vest ratably at $12, $13, $14, $15, and $16 per share. So that kind of ends it up with the presentation right there. Let's get back and I'll give you guys my final thoughts. So here are my final thoughts. I'm going to be buying the stock and I'm going to be buying the warrant. I'm going to make sure that I get in at the price that I feel is the best price. And that's what I discussed in the technical analysis. So I'm definitely going to be looking for that $14 range. If I see it, then I'm going to be adding. I could definitely see the stock getting to $20. I could definitely see the warrants getting to $10 plus and so forth. So I'm going to be making a move on those. As far as if you're thinking about investing or you're considering it, hey, I would definitely give it a look. Do some of your own due diligence as well and see, hey, if this is an opportunity you'd be interested in, all right? Because like I said, I'm not a financial advisor and this isn't financial advice. So when you do invest, just know that you're doing it at your own risk. I'll be talking to you guys soon. Peace.